Okay, quick market update. I'm going to have a look at gold. I'll have a look at oil as well. And just going to look at the correlation between the gold price and the S&P here. And I've done this many times before. I know I've done videos on it before, but the old sort of common narrative is that gold should go up when everything else goes down. And rather than me just disagree with that, I'll just show you my reasonings for that. I mean, basically, I've done this sort of test many times, and I do it with the stocks as well, where you can just put a start date in, you can put an end date in, and you can look at the stocks, what lead the market, the best stocks in the market. They tend to go with the gold stocks as well. So something I've noticed over the years is gold making a run before the market implodes. We've had that this time. We had it in 2011. And then once the market, everything gets sold off together, the narrative is, they dump the gold positions to pay for the margin calls. So whatever it is, it's something we always see. Gold stocks getting totally crushed along with every other stock. So quick little look at the 2008 market route. I'll apologise for my croaky voice because I've been sick for 6 weeks now with a cough, and I might have to mute the mic a couple of times through this one. So 2008, the market just imploded. Gold, it had relative strength, but it wasn't trending. So I've marked on this chart where gold trends against the market, and literally was right in the depths of the market route. We had another leg down on the at the end of 2008, beginning of 2009, another leg down on the S&P, and gold basically bounced back to its highs. And then when the market bounced off its lows, gold based out, and then it took off. So the two are kind of running together here. The market ran longer than the gold price. There was a pullback here in 2010. I was lucky to be out of the country and on a desert island somewhere in the Mentawai Islands in Indonesia when that happened. So I wasn't exposed to that. But gold did outperform for a very short period here as well. The green is where the gold is outperforming. And then they just did their thing. They melted higher together. Upswings, downswings, these little minor swings, aren't really, they're not really worth marking out as outperformance, because it's just little swing moves. We're looking at more primary trend here. And then coming into that awful summer in 2011, gold kind of went, vertical as the market imploded. So, in this occasion, gold had a really good pop, but it had a good run as well coming up to it. Excuse me. And then that was it for gold. Now, I will tell you, in 2011, all anyone wanted to buy was gold, and gold just drifted. Drifted and drifted and drifted and drifted and drifted. And the old wall of worry, we're going down to sort of wherever on the FTSE and down. It was absolute. I've never seen, I've had money in the market since I was a teenager, but I've never seen so much panic, on a market what's rising, so many bear. I don't know if it's the sort of increase, the social media effect where you can see how everyone sort of panics. So I've never known so much fear when a market's going higher, and the market was fantastic. It's just a fantastic market leg higher. Gold just kept going lower. So, think of these correlations as you will. I will always come at them looking at my end of day screens when gold stocks are in the screen, as they were sort of early in 2019. In fact, before then, when did AAZ set off? I can't remember. But they tend to fill the screens together. I screen for strength, and we start to see these really good setups in the swing screens and the breakout screens. I've been pretty bearish on gold. I sold my gold at the highs. It wasn't a kind of excuse me, it wasn't a clever thing. It was just, I was going to sell half anyway. There was so many good stocks setting up. The stock I was in came through with a report what dropped it down on my growth list and was kind of not what I wanted to trade towards in my own sort of fundamentals. So I dumped the whole position and I rotated into stocks. Had a good move on stocks out of that. So, there was nothing clever about it. It's just what's in the screens is what's moving now. And gold was just late stage in every stock I looked at. I didn't see one what wasn't late stage. If it was in an uptrend, it was extended. So, that always tells me what, if Mo, you're asking Mo Farah to run the London Marathon and then turn around and run it again backwards if you think, it could do another move. Well, it's not unheard of, but when stocks have made huge moves in the sector, it's usually going to rotate at some point, and it's not going to do the same move it's already done, is it? Touch wood. Sometimes it does happen, I suppose, but it's very rare, and I'm not a rare outlier trader. I'm just, I'll hold a trend for the outlier, but I'm trying to sort of position for what's moving now. So we'll move from that. If you bought gold before the correction, thinking it was, the old gold should go up, and I did have a bit of a Twitter battle with someone who said if you think you're bearish on the market, you should buy gold, and I disagree straight away. It's either on or it's not on. So that is gold. Let's just go and have a look we'll look at Brent. I'll just get rid of this other graph now. So I'm just going to put the log scale, the normal chart back on this, because we looked at this breaking trend. It made a huge move, oil, off those lows, and it broke trend, and it just, the way I usually, I don't become bearish. I just go with this will probably trade wide and loose at best. Sideways would be a win for Brent after breaking trend after that big move. So this is the breaking trend. Very simple. You could put however you want to do it. That's how I do it. Usually go wide and loose from then. It came all the way back in. It did the old previous resistance should become support, but very loosely, because look at the areas we're looking at, and it did support it for a while, but we got lower high, and we got that news, didn't we? We got the news spike, and the narrative was this was gonna, oil companies were a buy here, and I should really keep these videos when I do stuff like this, but we just said they've dumped this on retail. This is the old gap and crap trade, and it came back in, and what we start to get is a reverse. I'd be looking at the other side of this trade, and I'll show you why in a minute. I like to buy bullish sort of basing patterns. I trade around the base. They did it again. A new spike gapped it up. It just got sold and it drifted off down to the lows. Let's invert this scale. that is a line I would look to buy. How would I buy it? Well, it's an efficient market, breaks out, first retrace, off it goes. And we actually looked at this, and it's very rare you will see me put diagonal trend lines in, because they're so subjective. I didn't put them in as a breaking trend. That's pretty useless. These diagonal breaking trend lines are very useless when it comes to real world trading. But channels are channels, and it's good. It makes good visual as how things can trade in a channel. The break of trend lower again is kind of here. And Last Chance Saloon was here, and it broke that and threw back as well. So you will see, you could have put the break of trend here. It broke trend, threw back, off it went. Or here, but active high, lower high, lower high, lower low. Big breaking trend. The direction is now down. Now, I'll also just... The swing filter I've got threw up every oil stock in the whole UK and US market went through that swing filter. They all triggered this bearish filter, what I use, and they all triggered it short. The whole market, and this was a long way above where they are now. So, when you see, same with gold, if you see them en masse hitting your screen in a certain direction, well, that's probably where they're all going to go. They're all knocking on the door together. So, same again in the radar update. In the end of day screens, if you was there, I said, I'll be honest, this might sound crazy, but I could see Brent trading in the 20s. And where did it go to? It went to the 20s. So, this is not kind of magic big calls. It's just very simple, trends. Very simple trends, but I never trade on what I think. I only trade on what makes the money, and I see that in the screens. We see in tonight's screens what they will be talking about in tomorrow's news. That is always going to be the case, So you've got to sort of exist at the right hand edge, looking out of the windscreen, not in the rear view mirror. And I always say, if you see a trend, you've probably already missed a trend. So, where are we now? Well, if oil bounces, it'll, it takes time. It always does. As we said with gold, if you're going to take part in that last leg up on gold, it's probably better taking part in the gold price, because all the stocks are drifting. They didn't take part. If you look at AAZ in the UK, it's a lower high, and I said this could be building a lower high. It's on a previous video in the YouTube, and it rolled over and died. So, you will see the stocks set up. It usually takes time. V bottoms are quite rare, but they're not so rare in the indices as they are in the actual stocks. You don't see it very often in stocks. V bottoms for a stock to be trading down like that, and usually they do a lot of wide and loose action and then tighten up a bit, and it takes time. So the best stocks are going to be structurally trending still, in my view, not ones what are cheap. Cheap has been absolute. We watched a stock half in price over a day and a half session, and apparently it was cheap, way above that. So you've got to remember the old rule: if something's trading at a pound and it goes down to 10p, it's just lost 90 pence. But if you buy it thinking it's cheap, it takes another 5 pence move to lose half your money. So, it's moved 90p What's 5p? Nothing, you know. So do not get caught out on those knives is what. In fact, I'll probably just load this in the YouTube. So, you know, this is how I sort of trade. It's not my way or the highway by any means, but I'd prefer to sort of unwind out of the market early, as I did. And my early is usually, you know, give back the tail on profits and stuff. It's part of the game. I try and trail things wider in small caps, and you know, just sat in cash watching the carnage is where, you know, I want to be. You know, I had money running into the tech bubble. I had money running in fact, I was lucky to be out at the top of the GFC. I missed 2010, what was just a bit of a correction. I had money running through 2011. It wasn't fun. So, you know, this time, every correction since, the trend model's done its job. I nailed down my sort of trend model in 2011 to strict rules, and it's done me really good ever since. So, say it again, hopefully, you know, if you're looking at a 5 to 15% drawdown, you know, my limit's 10% heat maximum, but drawdowns off all-time highs, open profits, you know, can get given back. I think you've really outperformed and in an extremely advantageous position right now. So good luck. Okay.